I wanted to make sure that you guys were aware of this. So a lot of you guys are watching the NASDAQ market, and the NASDAQ market is doing incredibly well based off of the past 4 to 5 weeks, right? We went from lows of $398 to highs of $519, nearly making a full recovery in one of the quickest periods of time that we have seen in history. Now that's great, but things are not looking good globally in the sense of if you pay attention to the bond market. I wanted to share it with you, and I can make a video that's a little bit more detailed, but just wanted to keep you guys up to date. You guys let me know down in the comment section, and hopefully I earn your thumbs up, and maybe you can consider subscribing. So a lot of you guys know that markets have been rising due to Trump instilling hope into the US markets that a trade deal will be signed. To my understanding, no trade deals have been signed by any means, right? Nonetheless, stock market is rising because he continues to send out tweets of markets are about to rocket. Cool. Markets have done extremely well within a short period of time. The part that, again, a lot of people cannot ignore is that globally, the 30-year bond yields from Europe to North America to Asia are all screaming emergency. And normally, if we see something like this that is happening globally, where all of these bond yields are beginning to rocket, this is something that is suggesting that the markets are smelling some form of trouble in a massive scale globally. It's not just the US anymore. You have France, you have Canada, you have Belgium, Australia, Spain, Italy, Japan, United States. We continue to talk about it over and over again, where even today, Japan's 40-year, and yes, I am saying 40-year bond yield just jumped to 3.47%, the highest that it's been in 2 decades. Again, well, what exactly is going on? Normally, and I just want to give a quick little kind of like breakdown. Normally, when we see these bond yields begin to increase in price, what we are seeing is one of two things. Some people are suggesting there's some form of conspiracy that it's China that's dumping a bunch of these treasuries back into the market, causing these bond yields to begin to go up. The second thing is that, well, things are not good. If you actually pay attention to our economy, people are not able to get a job. People are not able to afford to be able to buy a house. It was just released, and I wanted to share this with you, that the U.S. market has reached its most unaffordable level in history. Yet we continue to pretend that because the markets are rising, that the stock market is a representation of our economy and how Americans are doing, which is the furthest from the truth, right? The stock market is a leading indicator of how investors, which again, investors are incredibly greedy, how investors are perceiving future guidance for our markets. But then guess what? Nothing has changed. Our GDP for Q1 of 2025 is still down. We still have not seen the Federal Reserve cut interest rates. And now with these bond yields beginning to go up, again, there's huge uncertainty that not only is it very unaffordable to buy a house, it's unaffordable to just live in America. Everything is incredibly expensive. And now we're seeing this on a global scale. So things might look fine as of right now for, individual stocks or overall markets. But let's be honest, right? What has been driving the price up? It's all been based off of hope. Fundamentally, nothing is doing better. It's not that things are more affordable now. It's not that it's easier to buy a house now. It's not that it's cheaper to borrow and take out a mortgage to buy a house. It's now more expensive, and it's only getting more expensive as these bond yields continue to go up. For those that do not know, it's normally the 10-year treasury that gets viewed as kind of like the benchmark on how mortgages are placed. And as of right now, because of the recent uptrend, I think like the cheapest we can get is like 7.5 to 7.75% to take out a mortgage, nearly 8%. And the more that they push up, the more expensive it will be for an American to take out a mortgage. But yet markets are still pushing based off of hope. Again, It's just something to make you aware of how global markets are doing. So I just wanted to make sure that you guys were aware about what is happening globally so that you can make a more informed decision at these overbought levels. It's not that you need to sell everything, right? I have my long-term investment on Nvidia. I have my long-term investment on QQQ, on Apple. I have no intention of selling those positions, but I have no intention of buying more at these levels. Being level-headed, being open-minded, knowing that Nvidia went from $83 to highs of $135 in 38 days. That is a 60% return in 38 days. Don't be stupid. Know when to be aggressive, when to buy aggressively, and know when maybe it's not worth the risk. We are officially at a point where if you look at Nvidia, the profit potential to go back to previous highs is now less than the risk potential if we go back to previous lows. That's not to scare you to sell. Like I said, I'm not selling any of my long-term plays, but I also am not adding any more at these extremely overvalued levels within a short period of time. Because of how quickly they've gained traction, you can't be surprised if they begin to retrace. That is not to scare you. The only people that get scared during market pullbacks are those that are either in too aggressive or those that did not prepare. It should excite you. If markets do pull on back, it gives you another dip buy opportunity, just like last time, to be able to load up on good quality companies and to go long again, long term. But again, you have to understand what is going on, not just in the stock market, but what is actually going on globally. So I wish you guys nothing but the best. I wanted to keep you guys up to date. I took a little short position, and a lot of you guys know is I decided to buy the dip on UNH on my investment account, and I did it with about like $5,000. I bought another $2,500 yesterday, but I'm shorting this stock. I'm shorting this stock with my trading account. Again, trading is very different than investing. I'm actually going to close a portion of it. I have a small position on it. It's nothing crazy, but $4,100, again, my focus is I can make money in intraday plays, but I also always try to set myself up for long-term plays. But it's just a different intention and a different timeline. I look at, different time frames to get different perspectives. And I think that that's all I ever want to encourage you to do is don't put yourself in a position you simply cannot tolerate the timeline it's going to take to get there, right? Great things come with time. Hope to see you guys for our live trading session on Monday. That's going to be the second link in the description down below. And like always, let's make sure that we end the year on a green note. Take care, team.